Hey guys, Michelle Kinney here. Thanks for checking in. Thanks for checking out my video. I'm about to make an amazing video on Bitcoin. You have to stay till the end. I'm going to go through 3 different investments, different ways that you can invest in Bitcoin. First of all, MSTY is a YieldMax exchange traded fund that focuses on high yield. So I'm going to show you guys, I'm going to look under the hood and show you guys what you probably don't know about that. I'm going to compare that against Bitcoin, and I'm going to talk about that a little bit. And then I'm going to compare that against MicroStrategy, trading MicroStrategy using options. Now, we all know what Bitcoin is, right? Now, who here wishes that they bought Bitcoin like when it first came out or shortly after it came out, when it was like 10 bucks, 100 bucks, 1,000 bucks? I remember when it went to $10,000 and people were like, oh my gosh, that's crazy. Well, guess what? Bitcoin now is like $114,000 per coin. By the way, you don't have to buy a whole coin. You can buy fractions. But here's the problem with buying Bitcoin. Bitcoin is a great asset class, but the problem with buying Bitcoin is just like stock. You buy it, you put your money into it, then you hope and pray that it goes up, and you wait some infinite time frame in order to sell it and then get your return back. Well, what if I told you that there was another way to actually make money right then and there when you make the trade? So let's compare it. So first of all, I want to show you guys what Bitcoin has done over the past 10 years. We're going to look at a 10-year history. Okay, so I just pulled up barchart.com and I'm going to look at Bitcoin, right? We see Bitcoin right now, it's 114,146. And let's just take a look at the returns. Year to date, up 21%. You know, it's not that great. Bitcoin is a little volatile, right? It's high, it's low, etc. But let's look at extended periods, right? 1 year, 52 weeks, 87%. 2 years, 323%. 3-year return, 486%. 5-year return, 938%. And the whopper of them all, a 10-year return, 47,893% on your money. Let me show you what that would mean in dollars. Let's say you invested a modest $5,000 10 years ago in Bitcoin. How much money would you have today? Well, let's just calculate the math. 5,000 times 47,893%. That's what it did the last 10 years. That would give us a dollar value of nearly $2.4 million. Now, that's crazy. Invest $5,000 and make 2.4 million. That shows you the power of Bitcoin, right? So let me compare it against MSTY, and I'm going to pull this up. Okay, I'm going to compare it against MSTY. Now, a lot of people on my YouTube channel have been talking about YieldMax funds, and YieldMax is popular these days for creating income for people. But here's what people don't know. The income that you're getting is actually a return of your capital. That means, let's say, for example, you're investing $1,000. Well, part of your return, your distribution, the income that you're making from that fund is actually a return of your own money. As a matter of fact, if we look at YieldMax website, their own website, it shows you the distribution rate of 93, the most recent distribution rate of a little bit over 93%. And most people would be like, wow, oh my gosh, how do I get into that? Let me dump some money in there. However, let's just take a look under the hood, so to speak. The most recent distribution on August 29th, 2025 contains 60% return of capital and 39% income. So that gigantic 93% rate of return actually includes 2/3 of your own money back. And then let's just keep looking under the hood. MSTY is YieldMax. MSTR, that's MicroStrategy. That's the ticker for MicroStrategy. Option Income Strategy ETF. Now remember, this is the YieldMax website themselves. Check out this. This fund does not invest directly in MSTR. So it's called the YieldMax MSTR Option Income Strategy ETF, but it doesn't even invest in MSTR. This is an example on how Wall Street tries to pull the wool over your eyes. Don't be a sucker. So let me show you, you can invest directly in MicroStrategy. And you can do it using options. So let's take a look at my options chart, right? So this is my platform. I'm going to show you live exactly what the numbers are, and I'm going to walk you through the calculations. And let's just compare MicroStrategy total return. So this is financecharts.com, and we're just going to take a look at MicroStrategy right here, and we're going to look at the 10-year return, right? So MicroStrategy actually returned 1,500% over the past 10 years. Now, far less than Bitcoin, right? Because MicroStrategy is a little bit newer, and it's not comparing necessarily an apple to an apple, but still really, really good. 1,500% return. So let's take a look and see if you traded options. Now let's talk about options for a moment, because this channel is all about options. And the great part about options, when you sell options, you create cash in your pocket right away. So it's very different than buying Bitcoin, even though it's a great asset class. So even though Bitcoin is a great asset class, the problem with Bitcoin is you buy it, you don't actually get any money until you wait until after the price goes up, and then you sell it. So it's like, okay, let me put some money in. Let me hope and pray it goes up. Let me withstand the volatility, right? Because it's very volatile. And then let me have to sell it to actually get any of my cash. But when you sell options, you get paid right away. There's only two strategies that you need to know: selling a put, selling a covered call. I'm going to walk through both in this video. Stay until the end. So let's say, for example, we want to sell a put on MicroStrategy. What that means is that we're just committing to buy the stock, 100 shares of the stock, if it goes down below a certain price. We get to choose the price. So right now, MicroStrategy is trading at $3.22 per share. So let's say we don't want to pay $3.22 because that's like a retail price. We don't ever want to pay sticker. We always want to buy something at a discount, and we want to get paid to do that, right? So let's say instead of paying $3.22 per share, we sell a $320 put. Well, what that means is we're committing to buy 100 shares if it stays below 320 when it expires on October 3rd. Now, that's only 3 days away because today's Tuesday night. So we have Wednesday when the market's opened, Thursday and Friday, right? This last traded at 5.6. That means $560 gets dropped into your bank account right away. You don't have to wait until it goes up and then sell it to get your money. No, you get paid right away. And what you're committing to is you're committing to buy 100 shares if it goes below 320. That's cool because it's a good stock. It's based on Bitcoin. And if you have the money to withstand the ups and downs, it's totally fine if you have to buy that stock, right? So let's take a look and see what the mathematics are. If we had to buy this, what our rate of return would be. So let's take a look. So if we're getting paid $560 and we're committing $32,000, because if we sell a $320 put, we're committing that we might have to buy 100 shares at 320. So 100 times 320 is 32,000. So I'm going to get my rate of return like this. I'm going to divide my premium that I'm getting, $560, divided by 32,000, which is the amount of capital that we'd have to put up to make the trade. And that gives us a rate of return of almost 2%, 0.0175, but we're only holding it for 3 days. So let's annualize that figure out. We're going to divide it by 3 days, and then we're going to multiply it by 252 because there's 252 trading days every year. That gives us a rate of return of 147% on our money, and we don't even have to wait to get paid. We get paid right away. Worst case scenario, MicroStrategy drops below 320. Then we buy 100 shares at 320. But here's the best part, guys. If and when that were to happen, first of all, you keep the premium either way, the $560. No matter what happens to the price, you keep the premium that you're paid right when you make that trade. And if you have to buy the shares, you sell a covered call against it right afterward. Let's take a look and see what those are going for. And let me explain to you exactly what a covered call means. Basically, selling a covered call is when you own 100 shares. Let's say you had to buy these 100 shares at 320. That means that you're committing to sell your shares at a higher price if it goes higher. If it doesn't, you keep the shares and you keep the premium. It's amazing. You make money if it goes down, you make money if it goes up, you make money if it stays sideways, and you get paid right away. You don't have to wait some infinite time after you hope and pray that the stock goes up. So let's take a look and see how much money we would make. Well, the 325 call right now last traded at $550. So here's what that means, guys. Let's say you bought the shares at 320 and then you sell a covered call against it, a 325 covered call. You're saying, okay, I'm cool if I have to sell my shares at 325 or higher because I only paid 320. It's all good. And the purpose of doing that is to create yourself income every single week. So if you're making $550 let's calculate what our rate of return would be. So if I'm making 550 and I had to pay $32,000 for the shares, right? And I'm holding this for, let's say we're going to compare apples and apples for our 3-day time frame. I'm going to divide that by 3 and I'm going to multiply it by 252. Well, guess what? You're making 144% per year on your money. Now, here's the difference. I buy Bitcoin, great asset class, but guess what? You don't actually put any cash in your pocket until it goes up and then you sell it, then you get the cash. Number one. Number two, I can trade MSTY, and that's paying a great distribution rate, 93%, but 60% of that is a return of my own money. Why would I invest money with you and then you just give me my money back? No. Or you can sell a put, and then, so here's the best part. You can sell a put on MicroStrategy, and then if it goes down, then you buy the shares, then you sell a covered call, and what you're doing is you're creating yourself income every single week. Now, I'm going to show you guys a bonus, right? Here is a bonus part of the equation. I don't actually have to put up all the money to make that trade. No, I can use what's called margin. So margin is like using a little bit of the bank money. I put up a little bit of money, I put up a little bit of the bank money, and I get to make the trade. So you don't necessarily need $32,000. How much money do we need? Let's take a look. The easiest way to find that out is to use your platform. Now I'm using Thinkorswim, and so I'm going to click on the contract, and it pulls up an order entry box, right? I'm selling one MicroStrategy October 3rd, $320 put, and I'm going to right click on that, and I'm going to analyze the trade to see what our margin requirement is. Now our margin requirement on this particular contract, we see naked -1 MicroStrategy. Naked just means that you're using margin. The margin on this is $11,964. So let's just give an example of $12,000. Now let's calculate that premium, right? So let's go back. So we would be making $560 on the trade, right? So let's pull up our calculator, $560 on our trade, and we're putting up $12,000, right? Because we're using some of the bank's money. Now that gives us a rate of return of almost 5%. Remember, we get paid right away. We get the $560 dropped into our bank account right when we make the trade. Now, again, just like before, we're only holding the trade for 3 days. So I'm going to divide this by 3. I'm going to multiply by 252 to get our annualized rate of return. Now, guys, we're making 392% on our money. And some people out there might be like, no way, Michelle, you're crazy. That's not possible. Yes, it is possible. I'm showing you in black and white. And we're looking at Bitcoin. So Bitcoin, where has Bitcoin been the past? Let's take a look. Where has Bitcoin been the past year, 2 years, 3 years, 5 years? It's high, right? So the past 1 year, 87%, 2 years, 323. It's got a lot of volatility. So this is a way that you can capture all those gains, get paid right away, and participate in all the Bitcoin increases. You get to sleep at night knowing that worst case scenario, you're going to buy 100 shares of a great stock. And if you had to do that, you're going to sell a call against it right away. Is this amazing or what? Anyway, if you like this video, hit the like button, subscribe to my channel. I'm putting up a video every single day. I'm going over all different stocks, different strategies, selling puts, selling covered calls, how margin works, all these crazy things. If you want to be a part of our community, my community, there's going to be a link below. It's totally free. That way I can let you know when I'm announcing the next live event, when new trading tools drop, that kind of thing. So I'm going to give you the link below. And let me know in the comments, what do you think? Do you like Bitcoin? Do you like Ethereum? Do you like something else? Do you trade in MSTY and you didn't realize that most of that return that you're getting is a return on your own capital? Crazy. Anyway, I hope this helps. Cheers for now.